head of currencies and government bonds here at Columbia Threadneedle. Good to have you with us. How much are you reading into this? Is this going to be a sustained rebound, do you think?
No, we're not reading a significant amount into it. Obviously, we've had a very volatile period over the last few days. The market needs to catch some breath, and we're seeing that today. Is anything changed fundamentally? No, we don't think so. We actually forecast sterling to be this low even without Brexit. So I think by the end of the year we could see sterling significantly lower on the basis that the safe haven status that it once was has disappeared.
It's interesting you say that you forecast it was going to be at this level even without Brexit. Why is that?
Well, sterling has had a 6.5% current account deficit to finance. We felt that the global economy was slowing anyway, and the dollar would likely be stronger in a global context. So sterling was naturally going to be lower. With Brexit, obviously introduces a huge amount of uncertainty, and that safe haven status disappears.
And talking of bonds as well here, because when we look at government bonds here in the UK, we saw yields there hitting historic lows in recent sessions. Is that warranted?
Well, I think yields globally have continued to ratchet lower. The one thing that I think we would say is that going forward, longer dated UK government bonds, which were previously held as safe haven vehicles, aren't necessarily going to be that safe haven in the future. So perhaps as far out as 30 years, we start seeing those yields move a little bit higher relative to the shorter dated bonds, simply because that UK safe haven status is no longer there.
So what are you looking for next now? Because we know that we may have to wait some time for Article 50 to be triggered, and then the negotiations will start then. So what kind of trigger points are you looking for from that?
So I think there's lots of potential uncertainty in the near term. I don't think the market has done a huge amount in terms of making strategic allocations. A lot of what we've seen over the last few days has just been panic. It's been getting out of trades or hedges that were put on prior to Brexit. So we yet to really see what the market fully thinks about this. So we do expect sterling to trade lower. I think if we trade higher, and as a result of quieter markets over the next couple of days, and I think strategic players will be looking to short the pound.
Right.
And with regards to bonds, we are in lower for longer everywhere globally.
Okay, so hang on to your hats by the sounds of it. Matt, good to talk to you.